Many of the big US banks have beaten expectations on earnings, and some broader trends are emerging as a result. We're joined by Ross Healy, chairman of Strategic Analysis Corporation. Ross, thank you very much. It's great to see you. Thanks for giving us the time.
My pleasure, Andy.
What are you seeing as one or two patterns in these reports for the US financial sector?
Well, like a lot of things are going positively for the U.S. banks right now. I mean, among other things, with the stock market continuing to go up at a nice pace, their fees for management, for trading, and indeed with these high valuations in the market for investment banking, because it makes a lot of sense for companies with high valuations to expand, to acquire other companies, and of course then that contributes to the profitability of basically the Wall Street banks, which are the ones I think which are really doing well. In the meantime, because the economy continues to hold in there, loan losses have been quite benign so far. So there hasn't been that downwards pressure on profits from that area. And their net interest margins have generally been expanding and improving as long rates are holding up relatively well, and short rates are sort of oozing lower. Mm-hmm. It's a perfect confluence of positive developments for the U.S. banks, and they have been earning nicely. They have been, in fact, they've been not only beating consensus, but they've been whipping consensus. 3, 4, 5%. Nope. How about 16? How about 30? Yes, I mean these are big numbers, and the banks have been doing very well. Mm-hmm. Andy, one of the interesting things, however, is that when I actually look at what's happening to the bank stocks, the major bank stocks themselves. What I don't see is, except for maybe a couple of cases, J.P. Morgan is one. I don't see them kind of busting out to all-time new highs. They're sort of in a range. They're at the top end of that range, but I haven't seen them breaking out as of yet. So when I was asked, do I have a favorite U.S. bank stock, the answer is no, because I haven't seen those breakouts take place.
What about these worries about private lending in the United States? We've seen a couple of companies that were fueled by private debt, and the banks may not be immune, of course, if they have exposure to that sector as well.
Listen, in a sense, what I was going to say, what's past is prologue. Mm-hmm. We don't know what's going to happen to that private lending, and it's absolutely enormous. And the controls over the quality of that private lending is really a huge concern. And as you pointed out, Andy, we've already now seen 2 examples of companies that have gone bust, and with various impacts on private lending. Now, how that's going to affect U.S. banks, we haven't yet seen. What is the downstream effect? We don't know, because we don't know actually which of the banks are heavily involved with those private lenders, because I mean those private lenders got to get the money from somewhere.
Where should investors put money in right now, though? You are bullish. You say the market conditions look propitious for these U.S. banks.
Well, yes, they do, and the U.S. market itself, led by the Standard and Poor's, is appears to be trying to break out over the peak that it set way back in the year 2000. Now, it got up to that valuation peak, which is about roughly about 5 times book value, call it. Got up there, had a nasty little setback earlier this year, but it has clawed it all back, and it looks now as if the S&P 500 actually wants to break and break higher. And if that's the case, then there is still good upside for the market.
What about the Canadian banks? Are you interested there?
Oh, listen, yes, we are. But again, a couple of the banks are at very, very high levels. Now, the Royal Bank actually is heading back for a long-term valuation high, but TD Bank, which, as you know, has been in the doghouse, looks like it's breaking out over one of our technical breakpoints there, and it could be heading back to its usual high. So yes, we still like them. I do kind of have a favorite bank in Laurentian Bank, which has a very nice yield, is very, very cheap.
LB, maybe you can put up a 5-year chart. But that's been a long-term repair story. Nobody even wanted to buy it, Ross.
No, but here's the thing, the stock is trading at a huge discount to its book value, has a very nicely covered yield. This, I keep wondering why one of the Canadian banks just doesn't say, I'm going to have me that, because once they have acquired it, then their systems will raise the profitability of Laurentian Bank by quite a bit, and acquiring the Laurentian Bank could be enormously profitable. Very, very cheap because of trading at a discount to book, but very, very profitable.
Right. I wonder, though, I mean, presumably all the big banks have gone in and sniffed around, or many of them anyway, have. It's funny that it hasn't attracted a bid.
Well, I keep wondering, Trump keeps complaining that we're not allowing the U.S. banks to come in. Well, here would be a perfect acquisition target for a U.S. bank that actually wanted to come into Canada in a big way. Not that we don't have lots of U.S. banks, because we do. But if you want to come in a big way, Laurentian Bank would be a very good entry point.
For years they were unionized, and we heard, well, the banks won't want that. It's like, remember Germany put Lenin on a train and sent him into Russia as an infectious agent. Anyway, but the union is out of there. The workers agreed to decertify the union.
Yes, and I think it's for this very reason that the workers did agree to decertify, is because it would make the bank a lot more promising for an acquisitor, and they would therefore be taken up. And as I say, everything would improve if you had better systems, which can only be implemented by a larger organization, a larger bank. If you had better systems, your profitability would go up, and it would be terrific for the employees as well as the bank shareholders.
Russ, I always loved getting your take on things, and you do bring perspective to us. You were one of the prominent skeptics on Nortel all those years ago, of course.
Yes.
What is your take? Canadian politicians are expressing indignation at Stellantis moving production south. But is this inevitable? Are we just going to see this, that a big chunk of the auto industry moves south of the border?
Well, I am concerned about that, Andy. There's no question that Trump policies are doing a lot of potential damage, and the auto industry is certainly one of them. What the Canadian government is going to do about this remains to be seen.
What do you think? Should we just go for broke and say, bring in Chinese cars? Because we're being denied some pretty nice electric cars because we're mollycoddling our automakers who didn't get round to producing them.
Well, if they're all going to go south, then let's bring in those much cheaper and actually very good quality Chinese electric vehicles, and indeed, I guess if that's what's going to happen, then why not?
Of course, I say that blithely. We still have tens of thousands of jobs tied to the auto sector.
Realistically, of course, that's not the outcome that we want. We really want to protect our labor force and our automakers insofar as we possibly can. Yes,
we'd better leave it there. Ross, great to hear from you. Ross Healy joining us there.